Is your portfolio positioned for a rising interest rate environment? Hi, this is Barry Martin, Portfolio Manager at Shelton Capital Management. This question is being brought up daily now as interest rates hit levels they haven't seen since the beginning of the pandemic. The lift in yields largely reflects investor expectations of a strong economic recovery. However, with a strong economic recovery comes the collateral damage of a higher debt of obligations, lower returns for fixed income, and less favorable valuation models for your high-flying technology shares. Most Wall Street analysts see yields going even higher given the vaccine rollout and the possibility of businesses reopening and, of course, additional fiscal stimulus. Surging inflation expectations have been a key driver for 10-year yields. 10-year break-even rates, a proxy for where investors see the annual inflation rate for the next decade, touched 2.26% this month, the highest since 2014. Unless you are in a tactical fixed income product, this move higher in interest rates is a headwind for bond returns. When you look for alternatives for fixed income, have you considered covered option writing? Covered option writing is an attractive alternative because the portfolio has reduced exposure to credit, duration, and of course, interest rate risk. Many people use this high yield alternative because of the high level of cash flow and capital appreciation. Also, as you may or may not know, as interest rates rise, so do the prices of call options. So we receive more money for selling these calls. You could also use covered options as a hedged equity solution. Higher yields mean lower valuation for equities. So if you feel that equities are going to go sideways or slightly down over the foreseeable future, this type of strategy makes sense. Currently, with higher levels of volatility, we are able to sell some options 10% out of the money while still hitting our annual cash flow goal of 6 to 9%. According to Morningstar, the Shelton Core Value Fund, symbol is EQTIX, currently has an 8.33% 12-month trailing yield and a 14.59% 3-year annualized standard deviation. Well, that's all for now. If you have any questions, feel free to reach out to me or your local advisor representative. Thanks.